Hey, hello everybody in the SwingTradeFX family. I hope we are all ready for this one. I encourage anyone watching this video to actually watch it to the very end because I'm going to be showing you in practical terms how to carry out multi-time frame analysis effectively with key steps and key guidance on what you can actually do and how you can follow through with so much clarity. So with that being said, let's get straight into it. Okay, so a couple days ago, I posted on my community and I sent up a poll, and I said to everyone, what kind of video would you like me to, post next on YouTube since I haven't been here for a minute? And it's quite amazing that of all the options, the one that has the most vote was a lot of people wants to learn how to analyze the market correctly. So I decided that my next video is going to be made solely to show this practical step. This is going to be a very practical session. And I hope you guys pay attention as much as possible because it doesn't get any better than this. Okay. So now let's get straight into it and let's see how this actually works. So just like every other things that requires certain principles and systems, right? Your ability to carry out multi-time frame analysis systematically and effectively is primarily based on your understanding or your ability to apply specific principle or to follow a specific pattern in your process of analysis. So I'd love to highlight it out so that we can break this down into simpler fragments so that you can be able to follow. So now the first thing is this. For anyone who must be able to do any multi-time frame analysis successfully, you must be able to have clarity on the different time frames that you want to analyze on. So the first thing is going to be clarity of time frame. So what do we mean by clarity of time frame? It's very simple. You must be able to know what you're looking for on each time frame. So for example, I have different time frames and I have what I'm looking out for on different time frames. So the first time frame that I love to look at is the daily time frame. And then the next time frame I'm looking at is the 4 hours time frame. And the next time frame I look forward to is the 1 hour time frame. The reason why you must have the clarity of the different time frame you are operating on is for you to know exactly what you're looking out for in each time frame. So what does this mean? On the daily time frame, what do I want to see? On the daily time frame, I want to see and have an overall scope of the trend. On the 4 hours time frame, what am I looking out for when I switch to the 4 hour time frame? I want to be able to interpret the trend by identifying specific structures that make up the trend, right? So I want to get the structures within the trend out, and also I want to get my area of interest, right? I want to get my area of interest. Area of interest are those specific areas in the market where the market reverses, where the market reacts and start a new trend or continue an existing trend. And what am I looking out for on the 1 hour time frame? On the 1 hour time frame, what I'm looking out for is I'm looking for entry. So aside from entry, I'm looking for entry, and I also want to have a second confirmation if my area of interest is correct. But basically, most of the time I'm looking for entry. And sometimes I can actually branch into the 30 minutes time frame. If I'm not having a very clear entry, then I could go into the 30 minutes time frame, and I'm going there to actually look for my execution as well. So what you can see right here is you can see that I have a defined mission on each time frame, right? I have what I'm looking out for. So naturally, what does this do? It takes out confusion. It takes out analysis paralysis, right? Because I want to be able to have a very strong clarity when I'm going into the market, when I'm interpreting these candlesticks into the different zones and different structures and different levels. So the moment I segregate, right, or I designate what each time frames are going to be doing for me, it makes it easy for me to know that this is what I'm going to do on the daily time frame, this is what I'm going to do on the 4 hour time frame, this is what I'm going to do on the 1 hour time frame. So the second thing I'm looking out for after I'm done getting the clarity of the time frame is to analyze. But before I analyze, I have to be able to have an understanding of the tools I'm going to be using to analyze the market. So I don't put everything, I don't just insert every object on my chart. I use specific objects, and the lesser the number of objects you use, the better the clarity you have in your trading. That is why you see that regardless of the objects you impute on your chart when you're analyzing, at the end of the day, what matters is, are you doing it with respect to what is really going on the chart? So you don't really need a lot of tools. You just need specific tools to perform specific function. So in my case, what kind of tools would you see me use? If you follow me a lot, you're going to realize that I just use simple 3 tools, and these 3 tools, each of them have specific assignments I use them for. So I don't just impute these tools on my chart. I use them only when I need to use them to look for specific things. So what are the tools that I use? The first tool you're going to see me use is my Fibonacci. And why do I use my Fibonacci? It always helps me to find area of interest. The next tool that you're going to see me use is I make use of the support and resistance tool, usually the support and resistance line or support and resistance zone. And what do they do for me as well? They help me obtain area of interest. And I use the trend line when necessary, right? And what does the trend line do as well? The trend line helps me look for area of interest. So what do I mean by area of interest? Area of interest are specific areas of the market where there could be the possibility of a trade opportunity. Either the market is reversing or either the market is done with retracement and wants to continue in the direction of the trend. So these 3 tools, I use them to do the same job, but I use them in different ways, depending on the opportunity that the market provides at that point in time. And on some occasions during my analysis, sometimes I can see that these 2 tools gives me an intersection, right? Where I'm looking for an area of interest, and the Fib could give me that information, the support and resistance could give me that information. Sometimes the trend line gives me the same information. In a situation where the 3 of them reveals this area of interest for me at the same time, then I know that I might be looking at a high probability, trade opportunity right there. It doesn't have to be the 3 of them, it could be 2 of them. So the more they intersect, the more there is a confluence of these 2 or 3 tools, the more I realize that there might be an opportunity for me right here. So that is the second thing I'm looking out for. So the third thing I'm looking out for is understanding the market structure. So what does it mean to understand the market structure? You want to really understand that beyond the candlesticks, the market moves, and these candlesticks repeat themselves to form specific patterns. These specific patterns in the market are what we call the structures, right? The moment you realize or understand that the market structure is very important in analyzing because it determines the direction of trend, then you have so much clarity and you are good to go into analyzing your market using the multi-timeframe analysis. So that being said, we are going to see how I'm going to be using these 3 steps and having the clarity of what I'm looking out for and what I need to do and the tools I need to apply in analyzing the market effectively using multi-timeframe style. So let's get into it. Wait, before we get into that, if you're really enjoying what you're seeing so far and you want to get more of it, I would recommend SwingTradeFXacademy.com. This academy is loaded with top of the line trading resources that you need to step into your next journey. So you can go on the website www.SwingTradeFXacademy.com and choose the package that suits you. Okay guys, so as you can see on your screen, you can see that I have GBP, JPY, and I think it's very important for you guys to also know that you don't have to trade every pair. If you've been following me since my first video on YouTube, you're going to realize that I've been very consistent with trading pounds, Japanese yen. So you have to be able to get to a point where you choose one or two pairs you want to trade. You don't make money in the market by chasing every single opportunity across different markets. You just want to pick one or two pairs that you know you love. You love how it moves, you love the volatility, you love the volumes that comes into the market, you love the structure, and you want to stick with it, because the more you stick to one or two structures, the more you start to understand their dynamic very well, and the more understanding that you have about the dynamic of movement, the more chances you have at profitability. So think about it this way: if you stay consistent with a habit over and over, by the end of 1 year, and you repeat that habit every day, it becomes your second nature. The same thing applies to trading. The more you focus on one pair and you start to understand it, regardless of the outcome of every trade you take, when you make a loss, you learn something. When you make profit, you review it back. You have so much affiliation, right, with that pair that it becomes your second nature to almost know what the market is going to do, right? And the lesser trade you take, honestly, the more the better it is for your equity, your profitability curve, right? You realize that it gives you less, less need for you to be in the market all the time. It gives you less need for you to take a lot of trades, right? And the lesser trade you take, the more patient you become, the more quality, the kind of trades you find yourself picking, right? And this is how it works in the market. So I would recommend every day, every time, to stick to one or two pairs you know you're very good at. Some of my students trade just gold, some of them trade synthetics, some of them use my system to trade on stocks, some of them trade crypto. What really matters is you stick to one or two and you do your analysis effectively. So with that being said, let's get into the most interesting part, where I'm going to show you step by step how to analyze the market. So like I said, the first thing I love to do is to go into the higher time frame. What am I looking out for in the higher time frame? I'm looking for the current market trend. And for me to find the current market trend, it's very important for you guys to note this down. If you're using your journal, if you're watching right now, I want you to take this note down. For you to be able to effectively find your trend in the market, you need to know the range you're trading on. Why? Because you can't just take the old and zoom out and take the old trend and say that, okay, this is what the market is doing. No, these are macro information. These had happened over the years. So it's a lot of information for you to be able to work on, because you want to just analyze the market. So in this case, the rule is very simple. Look for the most recent low and the most recent high that the market has created. And I'm talking about the most significant one. Now, in this case, what is the most recent low? What is the most recent high? When you zoom it out, the most recent low, you will agree with me, is this low right here, where the market is right here. Okay? And the most recent high would definitely be this high right here. So we already found our range. So once you've identified the range, what is the significance of identifying the range in the first place? Like I said, you don't need all the information. The significance of the range is to help you to find those information you need to be able to take the next trade. And this information are as accurate as you can see them, right? So that means every single information I need to take the next good trade is within the confinement of this range. So what is the next thing you want to do? The next thing you want to do is now to apply your knowledge of structure to identify the current trend of the market. So what do I mean? It's very simple. The market is right here on this low, the market is right here on this high. So what do we see that the market has done? The market had made a move to the upside from the low side, hit that level of resistance, and what had happened? The market started to drop. And the moment the market started to drop, what do we see again? The market picked back up and started to move on a higher high, higher low. Then we had a break of structure right here, and all of these are the retracement of this right here. What do I mean? The market offered us a break of structure right here, as you can see. The break of structure right here. telling us that the market is moving to the upside. And ever since, what do we have? We have the market giving us a low, a higher low, and look at all this, a higher low. And now what do we have right here? We have the market giving us even a bigger break of structure. Okay, we can see that the market is giving us a bigger break of structure, right? And that is it. So if you really want to see what the market is doing, you really need to just look at the trend through the lens of what? Look at it through the lens of the structure. So if we are to identify the structure right now, these are the major structures indicated by the red sign, and these are the minor structure. After the market gave us this higher low right here at this major structure, now what do we start to have? We start to have this minor structure, higher low, higher high, higher high. Then we have all of this retracement happen, and the market resume back the higher low, and now we have the market right here on the high side. So what does that tells us? That tells us that the major structure, right? The major structure right here is an uptrend. Then the minor structure right here, which had formed, is still an uptrend. So this gives us the bias that the market is right within an uptrend. So the moment you understand that, it becomes very simple for you. So now what do we want to do next? The next thing we want to do is to actually identify this level. So like we said, when the market went from the low to the high and gave us this low right here, and the market started to move, we had an higher low right here. So here we have the market refuse to break the last low, then we have a higher low right here. So most of the time I'd love to label my chart, and I said we have a higher low right here. So what do we have next? We have a bunch of higher low right here that the market was building, right? So whatever you want to call it, you can call it a minor higher low, whatever it is, as long as you memorize it and you do not forget it. So we have a higher low right here at this level. So this kind of makes sense to us, right? Let me take this out, or let me just leave it right there because it communicates certain informations to you guys. So this kind of makes us to understand that the most recent higher low right here was right here, right? So for the sake of clarity, you want to identify the zone out so that you can definitely understand what the market is doing around that zone. So we have the most recent and the most significant higher low right at this level. So what is the next thing we want to do? The next thing I want to do is realize that after the market came off this higher low, the market went on this uptrend, right? So the next thing I want to do is to be able to understand every structure that formed this trend right here, because the goal is for me to continue to tell the story of the market as the market is going up, so that even though the market is going up, I could have a projection of where the market is going to, which the market is definitely going up to this level. But at the same time, I can be able to identify the different level where the market is finding this impulsive move, just in case the market wants to make a retracement before it continues. The market will not always make that sharp move to the upside, right? There are gonna be levels in the market like this level right here, this level right here, this level right here, where the market is going to make some retracement. And because this is happening on the higher time frame, it might not seem like a lot, but when you go into the lower time frame, these are opportunities also for us to trade against the trend, so that when the market is done retracing, we can buy along with the trend. So the goal is for you to follow whatever short-term trend the market is giving you, while you keep an eye on the long-term trend. And once the trend activates, you want to be able to join in, so you can make money on both ways or make profit on both ways, right? So the next thing is, I'm going to the 4 hours time frame. So let's look at the 4-hour time frame. What am I looking? This is where your knowledge of chart structure comes in. If you're really struggling with chart structures, you can go into my video that is pinned above right now, and you can be able to watch how I broke down chart structure. And perhaps you want a more advanced teaching and lecture on chart structure, where I hold your hand and I teach you through and out on how to understand how to apply your chart structure. You can also send us a message. You could go to our website as you've seen earlier, or perhaps you could just come on Telegram and hit the contact me button, and you can have access to me directly. So let's go on the 4 hours time frame right now. So let's identify the major structure. Remember that everything we want to identify is the major structure. So let us identify the major structure. So we have low, high, higher low. You can see the markets refused to break this level right here, and the market made a smaller one. Remember, we want to identify the major structures. So what we can see right here are just this major. You can see them. The market starts to form. The market starts to form into the higher low, and then we start to have all the structure until we got to this point. Again, like we did on the daily time frame, we don't need all this structure. We just want to know, to identify what are the most significant lows and high, and the goal is for us to just identify the last and the most significant low, which is this right here. Also, what are we trying to do? All we're trying to do is just to identify the range. Again, we don't need all the information. We just need the most recent low, right? So this is a higher low, right? So you can call it whatever you want. We don't really need all the information. The remaining information right to this ground has already told us that the market has been moving on an uptrend. So from a structural standpoint, this is the last low. So now, what have we been able to do on the 4 hours? We've been able to use the structure to significantly identify where the last major injection of buyer's order came in, which is the last low. In technical terms, we're looking for the last and the most significant low that led to the injection of buy order leading to this level. So at this point, we can see it. So what is the next thing we want to do before we find the area of interest that we want to, get into the market, right? We want to be able to identify if the market continues to go to the upside, where are the areas that we're looking out for resistance? Again, we know that overall, from the look of things, the market is going up, but guess what? We want to make sure that we take the next very feasible level of exit. So where is the next level? We look at the next resistance. The next major resistance is right at this level. So we can be looking at this level as next resistance, right? Where the market is moving towards. So now, what have we been able to do? We've also been able to identify the range. So what range have we been able to identify right here? We have seen the next resistance the market is going to, right? We've also been able to identify the most significant support where the market is coming from. So this is beginning to make sense right now. So what do we do again? This is where you now open this level up. Remember that we had a break of structure right here. And whenever the market offers a break of structure, there's definitely going to be some sort of like retracement in the market. So what are we doing right now? The goal is for us to now read the market. It's for us to read the market and understand what the market is doing. Now, we have two things in place, right? The market can either continue going back up, or the market can give us a retracement and continue going back up. So we really want to identify that, and we really want to make sure that our structures are correct, and we want to keep entrapping the market until, right, we get to our possible zone that we're looking at, where the market can give us the most feasible and real-time information. So what is the next thing we want to do? Again, within this zone right here, again, we want to identify what are the most significant zone that we have of the market. It's very simple. We have the higher high, higher low, higher high, higher low, higher high, higher low. Then we have this higher low right here. Then we had the market hit the resistance area. So at the time, this was an area of resistance right here, area of resistance right at this level, and the market start to reject. The market went back to hit those level again, and the market came to reject to this level, breaking this low but finding its momentum back, and the market has ever since been going up. So where is the next most significant low that we want to identify? Again, we have this level. So what you can see that we're doing is we acknowledge that the market is going on a buy, right? But then we want to be able to identify those specific areas where the buyers are coming in, because if we can identify those specific areas where the buyers are coming in, and we know where the buyers might be hiring next, we can now decide to say, by the time we're looking for our area of interest, this area of interest that we're looking out for, will this area of interest lead the market to coming down or the market going up, right? What do I mean? This specific area of this specific higher low, can it continue sending the market up to this level, or perhaps the market needs to come back to that level to test it, or even go lower, right? Perhaps go even lower, right? Break it and form into like a double top pattern, a double top pattern like this, and come lower and continue to go back up, right? We do not actually know that, but all we know is that we are going to keep identifying the market, and we're going to keep analyzing the market until we get to a point of interest. So now that we've been able to identify the most significant low, right? What is the next thing that we're looking for in this market? Now, this is where I start to look for my area of interest. And what am I looking forward to on area of interest? I'm looking to see is there anything obstructing the market right now that could make the market reject, or is there anything that the market has broken that will make the market to continue? That is what I want to look out for in the market. So the first thing I would love to see is that when the market made a move to this upside, we had this low right here, then we had this high right here. So apparently the market took off this. Remember that we had a bigger break of structure right here. Let's identify it. So we had that bigger break of structure right here, and look at the market. The market came back right here, formed into this most recent low, then went back to the top. So what happened again? The market took this off as also a break of structure. So we could see that the market just kept breaking those new highs and breaking those new highs. And what happens when the market breaks a new high? What happens? It goes back down into retracement. So what do we have again? After this retracement and the market hit right on this level, what did the market do again? The market broke another new high. So as you can see, look at it right there. So the market kept breaking highs and highs and highs, and right there. So now what do we have? This is where we now start to get careful, right? Because what we can see right here is that the market broke this new high and the market continued. Then the market went back into break a structure, right? Back into this level. Now, could that mean that the market is coming back for a retracement before it goes back to the upside? That is on the card. Now, this is the time where I now start to look for different order confirmation. So now there might be a probability of the market reacting right at this resistance that got broken, where at this point right here, right? So that got broken right here. Remember, you find these patterns, right? If you've been following my teaching, you'll find this pattern at the reversal, at area of interest. So this might be an area of interest, but we don't know. We need more confirmation. So what other confirmations do we need? Let's bring out the trend line. Interesting. So when we look at this trend line from a daily time frame, we can see that the market has been rejecting at touch 1, touch 2. Now we have touch 3 where the market has been rejecting. So what does this, possibly, what could it mean? Now, this is where you now want to come to the 1 hour time frame to look at things even way more critically. So we can see that the market hit this level, then close back. Now let me bring it closer. So you can see that the market hit this level and the market closed back. The market closed back into the structure. It got broken. So what do we see? We saw a situation where the market was moving higher high, higher low, hit this resistance area, couldn't do much, hit this resistance area, then came back down, then finally broke it. But when the market finally broke it, the market formed into a new structure as well. The market retested, went back out to this trend line, broke the structure. Now, could it mean that the market is giving us a discount to the 61.8 fib to sell further down? before the market continues to the upside. That means on the overall direction, the market is still to the upside, but could it be that the market needed some form of